Welcome to the Hog Market Talk podcast, your weekly deep dive into hog market fundamentals, breaking news, and industry insights. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
All right. Today is February 11th. I've got Luke Wells with us here today. He just joined us from the Minnesota Pork Congress, so I kind of want to start with that this week. How was your experience over in Mankato this week?
Very good. Mankato, the show in Mankato for Minnesota, it's a great venue. It's well attended, well put on. So a lot of things to celebrate right here in the industry, right? A lot of things to go through. So great event. We saw, good attendance for the show. We were really fortunate at our booth. A lot of customers, a lot of friends, a lot of prospects, a lot of industry. Kind of wraps up our big quote unquote show season. We had South Dakota kicked it off awesome. Iowa a few weeks ago, and town turned up. Minnesota show was great. Thanks everybody that stopped by. And Mike, it was a good show. Now, we have had a little sell-off in the futures. I think we're going to go to next, right? But still, the tone in the pork industry, the whole protein complex is just lots of really good stuff going on.
For sure. Let's get into that chart action here a little bit. April hogs pulled back over $1.50 today, 93.85. So we have pulled off pretty significantly after almost trading $100 there last week. What can you tell me a little bit about that hog chart here?
Yeah, so let's get start in with managed money, right? And so like last commitment of traders, end of last week, 126 or 8,000 long compared to record long, 146 or something. I'm kind of pulling that from memory. Like we've had a hell of a run, and we've had, a big appreciation in this market, right? And things have been going well. Slaughter, has been the last week was a big week, right? But this week a little even with a year ago, next week a little smaller. Like supply has been manageable. Packers have been needing cash hogs. This week on the cash hog market, Mike, we 88, 90 printed yesterday. That's above index in the 86 type range, right? And so just supply is good. But a lot of optimism. We almost hit $100. Was it like 99.80?
Yeah.
Last week. So just for some perspective on that, not that we can't do that, right? But Kate, if you want to bring up like the cutout chart, maybe make sure we throw 21 and 22 on it. Then hover your scroll, go to, about April 15th at expiration. All right, so this is kind of simple math, right? But when at a $99 or $100 April future at expiration, we're going to need that cutout to be probably really close to 110. Now, can we do that? Have we done that? Yeah. 21 and 22, if you hover, we were up there at those levels. Those were awesome demand years, lots of COVID stimulus, right? But last year, a far cry from it, and really the other years a far cry. My point was, we got this really nice, run. Futures got really excited. Cash, everything was kind of going, but cutout. Now I'm going to swing back to cutout. And demand is still really good, Mike. We're moving good product, and I don't want to sound like I'm whining about a 94 or, 93. It's been 97, 93. It's kind of found its home around 95, right? But the cutouts, it's kind of sticking. And like Cade showed in that chart, over the next month or two, it is not uncommon to have kind of a flatter, maybe even a slight downturn, in the cutout through the Lent season and whatnot. And I don't think Lent has the effect it once did, but it still is a thing. Still a lot of fish fries around, right? And so futures just, my whole point is, cash kind of, again, good, but Packers cutting some kills. Some more Saturdays got cut, cutout kind of hanging in that 95 area. Like if we wanted to sustain where we were at, cutout needed to find a new home closer to around 100 handle than did a 95 handle. And it hasn't done that. And again, I'm not like real bearish the cutout, but we had a little too big a premium. Basis was a little too wide. February's going to expire Friday in a few days. We were looking at a pretty wider than cut by a few dollars basis. It's kind of normalized here at this pullback. So, as we looked up, the April's most magnified is that the biggest $5 drop, if you will, right? But summer futures and whatnot pulled back a little bit. And, it's just, it's not uncommon. It's maybe not unhealthy. The forward curve, still really good. We're not $39 or $40 margin, but 34 or 35, still a great complex. Wean pigs week to week, new top last week, 122. Weighted average turned flat, which is normal. We're off the August. Pretty soon the big test, we'd be going off October and the September deliveries, right? But this market just it had really ran. It's got a little bit of a setback here, just a little bit of a correction, Mike. So we never like to see our prices go down, but the pork industry and all, the whole protein complex and all, we're still in a really, really good spot.
So you wouldn't say there's an incredibly strong catalyst to the setback we've seen. Just we went up for a really long, hard time here. Now we're pulling back a little bit.
It looked like the cutout line, draw a chart, like you say, it should have just kept moving, right, to support that kind of premium, and it just kind of flatlined. And again, whining about a $95 cutout, on February 11th. Demand's good.
We saw it a few years ago where we just kind of went sideways. So the rest of the year didn't get that summer premium like we normally do from a seasonal perspective. So we'll see if that trend continues here going forward.
Yeah. So again, this gives a chance to reposition and modify and whatnot. But we did what was probably a little, not disheartening, but a little harder to look at today is, even though we've had the front kind of moving down, we've been seeing still some green in that Ock and Dees, right? Today they kind of beat up the deferreds. October down $1.30 and Dees down $1.40, still at good levels, 91 and 81.5. I'm rounding there, right? But we pushed up and made some new contract highs with those, and a little bit of a pullback here today, but still, lots of good stuff in front of us. Kind of moving forward, I think, I don't know if we talked about this on this podcast or looking back, but, our team was out at a cattle convention last week, and there was a whole awesome podcast, on that and whatnot. But for our pork listeners, something that was kind of neat, our RFK was out at the cattle convention, spoke to the cattlemen, right? And of course, food pyramid, talked about food and protein's the top pyramid. That's a good thing. That's good for all of the protein, right? But for what our guy said, he was maybe not quite this blunt about it, but kind of was. He's like, he kind of begged and pleaded the cattlemen, quit calling the cow herd, grow the cow herd, right? And it's kind of neat to see something at the top level of that, urging that. I think another thing, lots of margin, maybe overweight in the cow-calf sector here today, right? But lots of margin in the cattle complex, a lot of excitement.
Really protein complex in general.
Protein complex in general. Some of our guys that went out there, a comment that caught my ear at least is, like cow herd, like cowboys, cowgirls, right? Just getting to be fewer and further between. Well, innovation. They said at the cattle convention, just all the technology, the drones, different things for efficiencies and labor that were out there.
How to do more with less.
And there is dollars in that segment right now to get reinvested. So the American rancher, the American pork producer, the American farmer all continue to be really resilient. Other things, and maybe I'll let you kind of lead the talk on this, but, end of last week, was that Wednesday, or when was Trump's China tweet? Thursday?
Yeah, because you saw soybeans really pop off there through the back half of last week. So really the big couple days were, if you really scrolled through, Tuesday was pretty good on soybeans, Friday, Thursday, even Wednesday. So Wednesday on through basically today, we've had pretty good appreciation through the soybean market here.
For sure. But and maybe you'll agree, maybe you disagree, but perspective, right? So, and Trump, he's always for effect. He's always big. 8 million metric ton on top of the 12 that just got done. When Brazil is harvesting, when Brazil beans are $1 cheaper than ours. And if we did sell 8 million more metric ton, that takes our U.S. carry out pretty close to scratch, right?
Yeah. So, if we think about it this way, logical doesn't really have to fit into the conversation, but the USDA did pop something into the WASDE report yesterday that basically suggested that, hey, I know Trump has suggested that China's considering upping to 20 million metric tons for their target this year. For them, they argued in the WASDE report that the balance sheet for the world doesn't change, the global balance sheet. They thought if China does buy that many from the U.S., you just take that away from other sales throughout the country to the rest of the world. So all in all, balance sheet globally stays the same, obviously, during trade wars. But who it comes from and where things get pushed around just changes a little bit. And the USDA said the U.S. numbers on the balance sheet probably shouldn't change, even if they do fulfill that. I thought soybeans probably do go up incredibly strong if they try to even fulfill that duty of 8 million metric tons, even if it is completely offset with losing exports to other countries. But I found that kind of interesting as well.
For sure. I think the other thing from an end user perspective, and again, I hold some biases, right? But I think the U.S. producer, corn grain producer, they want a little less beans production, but also resilience on China, a little more corn, right? But it's interesting. I mean, you ran these numbers, when with this soybean pop, right? I mean, it kind of neutralized. I mean, around $55 to $60.
You're getting closer.
Yeah, loss on corn or beans, right? So maybe just like a take home, maybe where there was talk 97 plus million acres of corn. Maybe that talk goes to 97 to 95. Maybe it probably saved a few bean acres. Maybe could save a few bean acres and all that. But yeah, yesterday WASNI, what they up exports corn 100 million.
That's it.
Which was justified, right? So tighten the balance sheet from a 2.2 to 2.1. I'm rounding. Still got pretty comfortable stocks from an end user's perspective.
Just as a disclaimer with that, it's a big export number. Like, sure, we're tracking really well and we put a lot of sales on the books. But at the end of the day, they're going to have to try to fulfill that number at the end of the day. So it's a pretty big number to live up to on the exports, which is always a little bit scary. So it's still over 2 billion bushels. That doesn't seem like it's going to be changing anytime soon here. But very soon we'll start talking about that next year's balance sheet very, very quickly.
Yeah, for sure. I think last thing, just we broke 50,000 on the Dow.
Yes.
Last week, so I mean that's another marker, if you will.
Choppy,
after a pretty rough couple days ahead of it, right?
That scared the crap out of me. I'll tell you what, a lot of choppiness through the equities and some of those tech stocks. It just very, very choppy. So as you get towards the top of these ranges, you do tend to see that a lot. As you put in record highs, it just it gets a little bit more volatile in any market that you're in. And the equities have plenty going on, whether it be geopolitically, AI bubbles supposedly, all sorts of things. So there's a lot up in the air, but Q1 looks like it's off to a pretty good start here, actually.
Yeah, for sure. Awesome, man.
Any final thoughts?
Hey, let's this weather.
It is going to be really nice out this weekend. The phone lines have been very, very quiet the last 2 days in the office, and I do not blame anyone for that.
It's beautiful. We'll take this in February up in this country.
That we will. All right. Thank you for your time today.
See you, Mike.